Hello, friends. How are you? So nice meeting you. We have discussed one session on the cost, type of cost. Now, that first video under break-even analysis also, I talked about type of cost and contribution also. Now, we are going to see in detailed manner what is contribution, what is PV ratio, where we have to look at. Okay, very important session, and you have to attend very carefully. Okay. So last time I already talked two type of cost. One is cost variable cost and fixed cost. Fixed cost I already told you that it is period cost. It has nothing to do with the production. So it is a fixed cost. It's a period cost. After the period is over, it may change or it may not change. Okay. So there is always period cost cannot be taken into account. Only what matters is your cost of production or variable cost, which varies with the production. Okay. So now we are introducing a new term called, you have to understand this, you have to learn this concept, this word, contribution. So we are having this new term called contribution. What is contribution? So normally speaking, what is contribution? I have contributed with 1,000 towards my building fund. I contributed. Okay. I contributed to this temple. Okay. I contributed to a church fund. So it is contributed. Like this contribution also, it contributes towards recovery of fixed cost and recovery of profit. That's why it's called contribution. So contribution means first it should cover variable costs necessarily. So there's no question. Variable cost has to be covered by sales price. Then what is left out after variable cost is called contribution. That contribution is used for paying fixed cost. Afterwards, after paying fixed cost like rent, etc., the rent, the other insurance premium, all fixed cost. After paying it, what is left out will be profit. Okay, so let us see. So, what is the definition? Contribution is the difference between sales and variable cost. Okay, so while selling it, while selling the goods, first variable cost, cost of production, which varies with the product production. So it is to be recovered first. So it goes along with it. So variable already told you, we already explained in the last session, variable cost goes along with the production. Okay. Production is increasing, variable cost will increasing. Okay. So it is a linear relationship between, a direct relationship between production and variable cost. Okay. So what is contribution? Contribution is difference between sales and variable cost. So what is left out? After recovering cost of production, after recovering variable cost, what is left out? That is called contribution. So here you should not be, see, here we should be only worried about contribution. I'm telling you, very important. Last time the session also gave importance to this contribution, I explained also. Now I am going in detail. So how you can find out contribution equal to sales minus variable cost. Sales minus variable cost. What is variable cost? Which goes along with the production. Last time, last session I already explained in detail. If you don't, again, you can go through this. If you are not aware of it, if you again go through my first session where I explained in detail what is variable cost, what is fixed cost, what is contribution. Okay, still I'm taking it. So sales minus variable cost, or is another term is called marginal cost. So don't confuse marginal cost and variable cost being used interchangeably. Don't worry, it is nothing but variable cost. Okay, now at this moment you learn it. There's nothing to worry. So contribution per unit of production, per unit of goods. So what is called selling price per unit minus variable cost per unit. So what is left out is contribution. Then what the contribution consisting of? Two things. Variable cost recovered. What is contribution consisting of? Two things. What is that? Fixed cost. Then profit. So we can also write like this. Contribution is equal to fixed cost plus profit or loss. Okay, or loss. So if nothing is produced, loss will be equal to fixed cost, because you have to pay the rent, you have to pay the premium. You cannot say, no, I have not run the machine, I have not opened the workshop, I have not earned any money, I have not made any sales, so I can't pay. You cannot say, you have to pay. That's called period cost. So it has nothing to do with your production. Okay, so already told. So contribution is equal to fixed cost plus profit or loss. Okay, So this is how it opens. So what is contribution is a very important concept. What is contribution? Difference between sales and variable cost, or excess of selling price over variable cost per unit. So we'll tell an example here. So this contribution concept is very, very important because we will be more worried about this contribution rather than the profit. How you are deriving profit? You are deriving profit after adjusting fixed cost, right? Okay. After adjusting fixed cost only you are getting the profit. Okay. So fixed cost is period cost. It remain the same. Whereas variable cost will go with the production. So we will be interested in maximizing the contribution, because more you sell, more you produce, more will be the contribution. Afterwards, from contribution, you can pay rent, you can pay the fixed expenses. After that, what is left out will be your profit. So here your shift is changing from profit to contribution, because this is how you have to see. I will just go on telling in this in the coming session also. I will work out some examples also. It's very important. Please follow me very carefully. This is where people make a mistake most of the time, because they, instead of looking at the contribution, they look at the profit. They will be deceived. Your profit is derived after fixed cost. But what is your contribution? Contribution, is it okay? Contribution, is it okay? Contribution is like a tank. I will explain the next illustration. So I will go more deep. Okay, this is only an introduction, contribution. Okay, so contribution. So, for example, let us say one is making jam bottle. One is making jam bottle. Or per bottle, he is selling at 100 rupees. Selling at 100 rupees. So material cost 30 rupees per bottle. Labor 15 rupees. Other variable expenses 20 rupees. Okay. So total variable cost or total marginal cost. Invariably I'll be using it. Total variable cost, total marginal cost. How much it coming? 65. What is selling price? 100. So what is left out is 35 is contribution. So contribution nothing but sales minus variable cost. Now we reduced this. Okay. Or else the contribution is consisting of fixed cost plus profit. Okay. Fixed cost plus profit. So now what is fixed cost? 10 rupees per bottle. Okay. So what the profit is? 25. So now our emphasis is on this only, not on profit. Contribution plays a very important role. So contribution is a very important. We should never forget this word contribution. The next illustration I will explain how it works. Okay. So for continuing contribution, the one more ratio is called PV ratio. Profit volume ratio. It is not actually profit volume ratio. It is contribution volume ratio. No name is there, profit volume. It is profit is nowhere included. Only contribution is included. Okay. So what is the ratio? What is the ratio of contribution to sales? Ratio of contribution to sales. Contribution, see the ratio, contribution divided by sales. Okay. So how contribution you arrived? Sales minus variable cost to sales. Like that you can put this way also. You can put this way also. Or you can put this way also. Fixed cost plus profit divided by sales. All one and the same. Okay. The only different, this is the main thing. So supposing your 2 periods are given. This is for academic purpose. So 2 periods are given, or 2 companies balance sheet are given. You want to find a PV ratio. What you have to do is change in profit or contribution divided by change in sales. This is one such thing. There will be so many uses, PV ratio. PV ratio will be conservative, because higher the PV ratio, higher the profit. Lower the PV ratio, lower the profit. Please understand. So most of the people, business people, will try to maximize contribution. They try to maximize contribution. So the focus is on contribution, not on the profit. Please understand this. So PV ratio is nothing but contribution divided by sales. You can put this way. PV ratio, sales minus variable cost to sales, all one and the same. Or PV ratio equal to fixed cost plus profit divided by sales. Okay, all. Or PV ratio, change in profit or contribution divided by change in sales. So these are the PV ratio. Once PV ratio is given, you got the PV ratio, you can find out contribution, you can find out sales, we can find out variable cost, all jugglery here and there you can put and you can find out. So PV ratio is given, you can find out contribution, you can find out the sales, you can find even break-even point. You can find the break-even point. So these are some of the uses of PV ratio. It is not a big thing, but what is here? Why PV ratio? PV ratio will be deciding factor will be will come handy in deciding a decision, making a decision whether to buy, whether to manufacture, whether to what the product mix you have to make, like that. So it is a PV ratio is an important thing. So PV ratio will higher the PV ratio, higher the profit, lower the PV ratio, lower the profit. So our focus is only on maximizing contribution. Okay. So what are some of the uses you see? You can tell. See, it helps in contribution, helps in suitable product mix. Product mix, which product, how much you can sell, how much you can reduce, so that you will get the maximum contribution. Okay. So again, fixing selling price, again contribution will help. So the selling price which gives maximum contribution, you can try to quote it. Okay. The selling where the selling price is resulting in negative contribution, then you can't sell those goods. Okay. Then in deciding break-even point, again break-even point is very important, unless contribution is a major point. Then whether to buy a product or manufacture. Okay. So you have to, again you have to make a analysis whether you have to buy a product or like contribution will help. Then assist in making direction in respect of bringing new product in the market. New product in the market, whether we can bring it or not, or whether it will be beneficial, we have to, again contribution will help. Then again, to choose among the alternative methods of protection. So which machine you have to use, which method of protection you have to use. So those machine which gives a maximum contribution per hour. Now this is another step I am going. Now at the moment only contribution per unit only I am talking. Contribution per unit. I am not contribution for key factor. Key factor I will tell later on. This is only contribution. What is key factor? Is nothing but there is some restrictions. Machine hour restrictions, labor is not available, material is not available. In those cases, you cannot take contribution per unit. You have to take contribution per key factor. That I will tell later on. Now at least contribution per unit only. Now you are taking contribution per unit. Okay, contribution per unit. Contribution per unit only we are talking. You are not talking about the limiting factors that will come later on. Okay, while taking decisions. So I will take separately on decision making process. Okay, then to optimize price. Even to fix a price, even it does not cover full cost. It covers only variable cost and something is left out. Still you can choose. Still you can choose the price, because our thing is contribution should be positive. Contribution should result something towards fixed cost. Then slowly we can manage a fixed cost. You can make a profit later on. Okay, this is the entry about the thing. Now we will go in the next session about some illustration. We'll work it out. But the importance of contribution in profit planning, and we'll discuss further aspects of this contribution. Okay, I hope you have understood this. It is a very simple concept. You don't understand, try to go through it once again, and it is not that difficult. And our focus is only on contribution, not on profit. You have to maximize contribution. Every business is interested in maximizing contribution, not in the profit. Because profit is arrived after fixed cost, which is the period cost. It may change, it may come down, it may go up. But what is your business basic value? Contribution. Okay. So we'll see in the next session other topics also. I hope you have understood this, friends. Thank you. Take care. Okay.